For more on the mobile payment industry and global expansion prospects, I spoke with Ed Busby. He's the founder of mobile consulting firm Hudson Mobile Advisory. I asked him how long it will take for mobile payments to fully catch on and why now.
It is going to be relatively low at first, for sure, because the biggest challenge at this point is acceptance. If you have the technology, it's really easy to get people through who are interested in the novelty to try the technology. The question is, do they keep using it? And right now, about 15% of your transactions, if you use NFC, you can tap your phone to pay. That is likely to increase over the course of the next couple years, due one to the entrance of Apple Pay, but more importantly because of something called EMV, a mandate by the major credit card networks that the retailers actually install the technology to accept contactless cards and, by extension, NFC payments on the phone. So that's why people are really paying attention now, and why the release of Apple Pay was so important.
Talk a little bit about eBay and PayPal. They're splitting up their businesses. I mean, they're separate businesses now, but they work together. I'm not quite sure how the future looks, but just very briefly, what does that mean for us as the consumer?
No, I think it allows PayPal to concentrate more on its core business. I think the bigger question for PayPal is actually the Apple Pay release. The Apple Pay release was not only to allow you to pay with your phone at checkout, but also to allow you to pay in-app with your iTunes account. So I think that's going to be a real challenge potentially to PayPal going forward.
Security issue, obviously a big deal. We've talked about data breaches at banks and big stores like Target. Does mobile app reduce the chance of somebody, I guess, stealing your credit card? In this case, I'll just take your phone.
Absolutely. So in the case of almost all the protocols that go through, your credit card information is not transferred wholesale to the point of sale. In the case of Apple Pay, they're issuing a single-use token which stands in for your credit card number, which is then matched in the cloud. So the result is that it's actually much more secure, and that's actually what's driving the whole move of the EMV mandate that I mentioned earlier.
Okay, and you think about this sort of the big picture as we take a step back, and you think of sort of computers, and now we're going online, and then to tablets, and now the sort of mobile payments. And you talked about the adoption rate being relatively low. What's the incentive outside of security that, I guess I'm trying to ask the question is, how does this make a credit card different, or a debit card, or any other phone card? You mentioned the Starbucks card. I mean, look, a lot of people already have that. So if you have the Starbucks card, do I need to put this on my phone?
Sure. So, I always say there are basically three steps, novelty, convenience, and ultimately value. So on the novelty side, you're going to get a whole swath of people, particularly those early tech adopters, who just want to try this. I think a lot of them have it in their mind that they're going to be able to leave behind their physical wallet starting on day one. That's not going to happen, but you will have folks that try it. Convenience is a key driver here. It has to be fast. It has to be easy. It has to be quicker than pulling your card out of your wallet. But ultimately, I think the reason people really adopt these is for value, and it's the whole host of things that surround your payment. One of the biggest pet peeves of consumers is having to carry around those very thick keychains with all of your loyalty cards on them, for example. This is an opportunity to really move those aside and combine them for one convenient checkout, not to mention things like offers and coupons and the whole host of other things that really bog down a transaction.
Ed Busby, thank you very much, founder of Hudson Mobile Advisory Services.